morning, everyone. Welcome to another webinar that we have regularly on the Sundays. And we will be talking about support resistance and measured moves today. So, many of the people who are here from my classes, it will be a kind of revision for them, which is good. But on a higher level, what we will be doing today is we will looking at how we predict channels, how you can draw channels and predict channels, how you can find out a trading range, and when you find a trading range, what are the expectations that you are making. We will see how we draw or how we find out support and resistance on the higher time frames, and then I will talk about the general support and resistance areas across ES in every 100. So if you find that there are resistances between 550, 100, and 5200, there are certain areas which can be replicated and you can expect resistance there. Right now we are in a place where we do not have any kind of resistance above, right? So if we go above the new 80H here, if we start moving above the all-time high, we do not know what is here, right? So we have to predict something, we have to measure things, and then we have to find out, okay, if we are holding our longs in this area, what should be the target that we are looking for? What is the minimum area that we will try to reach? And then as we keep hitting those targets, we will be adjusting our stop losses accordingly and make sure that it does not turn back and bite us and get take the trade into red, right? So we will be talking about those general lines, and then we will see how we can use measured moves in different contexts to find out what should be a target and what should not be a target. Right. And as we talk about these channel predictions and everything, I'll talk about the different measured move concepts as well. So let's start there. Let's see. Let's move on to the 5 minute chart. Right. So here we are on the 5 minute chart. Let's remove all drawings and everything from here. We will be able to draw them back again. Now, when you are in such a situation here, right, this is one of your bottoms and this is one of your bottoms. So this is a low and this is a higher low. Whenever you find such a situation, you draw a line like this, right? This is the first thing that you do. And then you find out where is the next high that you have. You copy this line again, and you put it on the right. Now when you do not know what is here, right? You do not know what is here, what is happening here, but right now as soon as I have this, I will draw a channel like this. I will connect these lows together, and then I will take that line and draw a parallel line to the top. And if you see, that channel mostly holds. What does that mean? That means that the thing that you are doing here, all the machines are also doing the same thing. All the algorithms are also doing the same thing. When you see this rejection here, or this profit taking here, you know that all the algorithms, all the machines are also taking a look at this area where they are taking profit. So when you know that is happening, you should also start taking profit somewhere here and actually see. Then they started to bring it back down. The bears tried to pull back the market in the very next candle. They failed, and we kept going up, and then we kept out of came out of the channel. But this was again a 1, 2, 3, 4, 5, 6, 7, 8, 9 bar micro channel. What is a micro channel? I have repeated these things multiple times in my previous webinars. A micro bull channel is a channel where the one candle has not taken out the low of the previous candle even by one tick, right? So if you see that this low is pretty far from this low has not taken out the low of the previous candle. This low has not taken out the previous candle's low. None of the candles have taken out the previous candle low. This is the first time. Did we take out the low here? No, this is a micro double bottom, right? This is a micro double bottom. We closed below that micro double bottom, but did not get any follow through, which is telling us, and then instead of getting a follow through below this micro double bottom, the bears got trapped here. As soon as this micro double bottom was taken out, there were stop sell orders which were placed below the low of this candle, right? However, The bears got those orders activated, but the bulls trapped them and put an outside up bar and then continued. It again tried to break below the double bottom area, right? It again tried to break below the double bottom area. And if you see the if we draw a simple fib here, if people started selling here and they sold again somewhere here, they did get their 50%, right? And come out here, correct? So they sold here, they sold here again, and they got their 50% break even, right? So the bears are out now. Since the bears are out, the bulls were able to take the market farther up. So that is how you need to look at what is happening in the market. This is the outside up bar. This was our first entry short. This was our second entry short, or this was our second entry short, which got trapped by the bulls. After this new high was posted here, all these 9 bars together posted a new high, right? Now, after that new high, if we start recounting, this is our first entry high. So we do not enter the first entry long. If you and in this area, you should still be holding your longs. I mean, 1 bar, 2 bar, nothing has happened yet. We have not created any bear gap to say that there is a chance for the market to go down now. Okay, so the market came here and it pushed back up. Now, this was a way of drawing your or predicting your channel. Now, if we look, let us take a similar example somewhere else, right? So, where's a good area to find that? Okay, let's do it here. Suppose you are in this part of the market. You are in this part. You have one low, you have another low. What you do again is you take a line and you connect these two lows. I'm having some difficulty because it's out of the screen. And then we have connected these two lows. And then we will take this same channel. And at this time, this is my highest point, right? This candle is my highest point. I will take this line and put it on top of this candle. Now I will have to see whether the market is respecting these lines. If the market is not respecting these lines, then I will have to adjust this lines, right? So right now, if I draw this, let me extend it on both sides. See, the market has been kind of respecting this line, but this kind of fell down multiple times but kept going. So what we do here is we now change this to this kind. Okay, so that we can capture the most of the move. And then we take this line again and put it again here. Or if you think that is now out of the range, let us see what is the best fit line that can come here. So at this point, I can connect 1 point, 2 point, 3 point. This is my best fit line. And that actually helped. Now, as we came down below the channel, okay, this channel line is my support. The upper line is my resistance. But we are in a bull trend, correct? Since we are in a bull trend, as soon as we came out, if we see, we have created a body gap while we pushed back into the channel. So this is a bullish body gap that got created. So this was kind of a trading zone, one, two, three, four candles going side by side. This was the displacement that got created out of the trading zone. And once we got this displacement out of the trading zone, that means it's a breakout of the trading zone. And the breakout of the trading zone is followed by another green candle. So right now here we have a very valid bull gap. Is it making sense, guys? We have a gap between the close of this bar and the open of this bar, and we have a green candle in between, which is creating a green or a bullish body gap here. Now, if you also notice, the third candle is also green in color, which is telling me that we broke out of this small trading range that got created. This is what I'm calling as the trading range, right? The small sideways movement. This is what I'm calling as the trading range. It came out of this trading range. It created a body gap with the third candle being of the same color as the trend. We retested the body gap. We retested the body gap here. We tried to come below the body gap multiple times. One, two, three, four. This is already telling me that this body gap is not going to be violated, and we will go a little bit up. Now, how much more we will go up? Your first thing will be, okay, this was my trading range, and this was the breakout of the trading range, and the breakout leg started from here. So if I put my zero here and my 50% here at the top, then I can expect the market to go another 50% to the upside, right? So if I put the zero here, and if I put my 50 here, or rather, this was the end of the leg. This was the end of the leg. The 50 here, then I am saying that the market will come here. And see, the market came here and immediately profit taking started, right? So they were waiting for the market to reach this measured move area, and immediately they started taking profit. Now, when you are in this measured move area, you should also take some partial profit, because according to your analysis, this is an area where the bulls were trying to reach. Now, the bulls reached there. You can hold on to a runner, but you have to give up majority of the position. Now, if you hold a runner, again, you will have to see what is my most logical area of this runner stop loss. At that point of time, I will look for the nearest bullish body gap that I have. This is the nearest bullish body gap, right? And then I will look for the closest low below that body gap. It will now depend how much you want to risk on this run. Remember, you had entered somewhere here, so you are still in profit. Even if you take a stop loss, you will still be in profit. So what I would do is, I would, even if I stay in profit, even if I take the stop loss, I will put the stop loss below this candle. This is my last bull gap that I created. After this bull gap, if you see, this is the next area of support that got created. So support areas gets created below gaps, resistance areas gets created above gaps, right? So this is the support area got created. I will put my stop loss one tick below this support area and see where my runner can take me. But another sign of reversal or another measured move up, and I will come up. Now there are extensions of this pip level also, right? This is 0, this is 50, this is 100. Correct. Now this is the 50% extension on the upside. Here you have the 50% extension on the downside. Now what happened is, I have talked about multiple times that these 33%, this is this see, they actually got the 50% extension on the upside, and then did we go up to 33.30 in this leg itself? Yeah, see, we did go up almost to the 1:2 area before we started falling down. Now, this is what we are doing on a lower time frame, correct? Drawing these channels, predicting these channels, drawing these fibs are all happening on a lower time frame. These concepts that I keep talking about, they are fractal in nature. What do I mean by that? Fractal in nature means the same concepts can be applied to any time frame. You can look at the same concepts with the same concepts. You can look at the monthly chart, you can look at the weekly chart, you can look at the daily chart, you can look at the 4-hour chart, you can look at the 1-hour chart, you can look everywhere. But what we normally do is, say, if you're looking for a measured move, there are people, there are machines, there are algorithms who play in all these different time frames, right? But then you have to, if you're playing on a weekly or a monthly time frame and there is a drawdown, you cannot come out of the drawdown, you cannot come out of your trade based on your 5-minute stop loss. If you're playing on a monthly time frame, you cannot have a 7-point stop loss that is possible to play on the 5-minute time, right? You need to have a bigger stop loss, and your account at that point of time will need to support that drawdown that is happening while there is a pullback going on the monthly or the weekly chart. So if I go to the weekly chart here, if I go to the weekly chart here, I'll remove all the drawings again. So sitting at this point, we can say that this was a drop, right? This was a pullback. And now we have closed above the high of the pullback area, although not the wick, but we have closed above the high of the pullback area. If I say that this was my order block, okay, before this gap got created. So see, we created this gap, and this is the resistance area, and we are already at the top. There is a possibility that this is a higher high double top. This is a higher high double top here, and then we keep coming down, and the maybe bears are stuck here. If the bears are stuck here, now if they want themselves to be relieved at this point of time, what they will do, they will sell here again. If they sell here again, their first sell was here, right? Their first sell was here, and they are selling here again. Say they sold the close of this week, they will come to 5164 in order to get break even. But for that to happen, now we have one, two, three. That means we have the body gap here along, and the body gap also falls on the 64.75, the 50% line, if you notice that. Okay, so now if we say that the bears will come down here and then the bulls will push back up again, that is also a very high possibility, right? We are at all-time high. We have a wedge, kind of a wedge top here. Let's see whether the wedge top continues to the left. Not on this weekly chart. Maybe on ES we will find something. We have a wedge top here, but the problem with the wedge top is this was with three candles, and this has happened with one, two, three, four, five, six candles. So this is not a perfect wedge top, and the market is still bullish. As long as the market is bullish, we are not considering that we are going to come down, right? Maybe next week, if we come and sit below this green box again, that is the time I will start thinking that, hey, we may come and test this area again. And that may be a result of whatever Powell says, whatever happens on the FOMC minutes, whatever they come out with the interest rates, whatever decision they take. Based on that, that next move will happen. Apart from that, the Sunday, Monday and Tuesday, I am actually expecting that the market is going to be in a trading range between that 4145 to 0905 area above 5300. Okay, so any questions about how we are finding these support and resistance areas? Any questions so far? Okay. Okay. Now then let us, so you understood how to predict a channel, right? Let's look at a 1 hour chart. Let's remove all drawings and lines. Let's look at a 1 hour chart and see if we can find such kind of a thing. Okay. So here we won't consider this. We won't consider this one, but we will consider this. Let's see what happens. And I think we will find a wide channel. Okay. If we connected these two lows, and then at this point of time, nothing else has happened. You are at this part of the chart. You are in this part of the chart, right? You do not know what is there. So you have drawn this line. You have drawn this line connecting this low with this low. Now you copy this line and paste it at this point of time. This is your high, this is your high, this is your high. So you will say that, okay, I will connect these, maybe these two. Okay, this is the best fit line that I'm finding here. So I will put the line here, but this is parallel. Now see, it came back down. It came back all the way and kept in the channel as long as we broke down. Now, when we broke down, when do we know that we can go short? We have created a channel, a gap here, but after the gap, there was no follow through yet. Rather, the bulls created another bullish gap here. The same gap got converted into a bull gap. But we are still not confident. We are thinking that there may be a deeper pullback. I am still not confident of this bull move. Why is that? Because even though the gap is created, can anyone from my student group say here why we will not consider that this bullish gap is a strong bullish gap, right? Can someone type in why we are saying that? Let's see if someone comes up. 3 bars needed, but what, we have 3 bars. We have one, two, three. The third bar also needed to be green. That point of time, see, like this here, right? Like this here. Now, if we see here, why did we get stuck? Because you see the sideways movement. This was our balance area. This was our kind of TR that formed on the hourly chart, right? This was a TR on the hourly chart. And then right above the TR, we got this bullish body gap, and see where it came. It came to the bullish body gap, went above and closed above this gap to create a it closed above the bearish body gap, and the same bearish body gap actually converted into a bullish body gap. This gap is a little bit. But this is still not an area where I would go long on a hourly time frame, because this gap is not a good gap for me. That is why we had this pullbacks. We started pulling back every time. You can scalp here. You can scalp here. We are in a bullish market. You can scalp. You can easily scalp on the bull side. But now it came down here. It did not come below the low of these candles. And right now, after this, we created a better bullish body gap here. Now this is giving me confidence. Okay, I can go long here, keep my stop loss somewhere here, and if this is my first leg, see, 1, 2, 3, 4, 5, 6 bar micro channel. With after that, we get a pullback. Now we say, being conservative, we will start measuring from here. We'll keep our 50% on the top of this. We will keep our 50% here, and we will try to reach our target. Now see, since you reached your target here, immediately what started? Profit taking. But bulls were not ready for this gap yet. Okay, they pulled the price back up. Some bulls did not even sell, thinking that it may go higher up. So they took their profit here, and it came down so much. However, again, if you see, this is the body gap where the bears got caught again. So this body gaps on the higher time frames will also create your support and resistance levels. Okay, so when you are drawing a support and resistance levels on a higher time frame settings, let us say, no, let's just remove drawings on this higher time frame. I will say this is kind of my order block area, right? This is where the the actual support is. Let me change it to a buy zone. This is where the actual support is. After this support area, what is my body gap? So right now, here I would say this is my body gap, or a better one, if I want to be more conservative, this is my body gap, and the prices never came there. Now we bounced from here. Now we go back and see, okay, what was happening here? Why did we bounce? We see that this was the displacement candle that got formed, and this was my body gap, right? This was the displacement candle that got formed, and this was my body gap. The price came and tested it and kept on going. Right now, say you are not in a trade. This was a news bar. This is at 8 to between 8 and 9. This is the 8:30 news bar. I think this is the CPI data bar. Yeah, Tuesday was CPI. Correct. This was the CPI data bar. So now I am saying that, okay, this guy started from here, ended here, and then we got the leg down, right? So we will consider this as a micro channel. Be conservative, not go up till the wick. I will keep my 50% here. Look at my target. Okay. Even if I take the wick, I was absolutely correct. As soon as it got there, they started taking the profit. But the bulls were so strong, it could not come down much. It kept on going. But if you have this idea of taking profit, and you are trading on a lower time frame, say you entered long here above 50 to 78, you knew this was the profit taking target, you took your profit here, you can actually find a reversal setup here on the 5-minute time frame and play short. Let us look what happened there. Let's just highlight this box and go to the 5 minutes time frame. Okay, so see, in this box, what did we do? We created a trading range, right? Now let us find out where we start trading. We start trading at 9:30. Now your close of the day was somewhere here. So your first instance was that even if we go back up, there will be a point of coming down. So as long as we are not crossing this measured move area, you are not sure that whether you are going to go up still. If you keep on going up at that point of time, you will be taking a long trade and try to see that, okay, if this was 1:1, where else can the market take me? See, it came up to the 1:1.58, the 50% extension of this Fibonacci series. Okay, and what are your profit taking areas on the fib levels? Okay, again, 11%, 21%. Some people also consider 23% here. Since I consider 1121 inside, 7989 inside, I consider it as 1121 on the outside also. See, there is no fixed way of measuring, there is no fixed way of getting support and resistance. It is all subjective, and it all depends on the person who is drawing that, as long as those lines are making sense to that person. Okay, you may say that my support is at 5215. I may say no, the actual support is at 5213, because below 5213 price never closed. Correct. So that is how we make a subtle difference. But if you see, 17 to 13 forms the zone of buyers. It is closing above 30, but every time it is closing above 13, but every time sorry, it is closing above 17, but every time the wicks are coming and closing 13, touching 13. So you and me both are correct in this case in saying 17 is support, 13 is support. What is the better way to say that? 17 and 13 is the support zone. So there are buyers sitting between 17 and 13. If you close between 17 and 13, you should think that, okay, maybe now this time it will take 13 out and bring it further down. So if you are in a long trade at 13 and you see there is something closing between 17 and 13, that should keep your attentions up, that okay, maybe my stop loss needs to be tightened, maybe it wants to break down this area of support and go further down. So this is another way of marking your support and resistances, and keep these lines in mind. And whenever you see that, okay, there was a, this is how you back test, right? So on the 1 hour chart, if we go back to the 1 hour chart again, let's remove all drawings. Okay. So whenever you see that, okay, this happened, and then we kept on going up, and we knew that this was the profit taking target where this happened. What you do is you mark this area and go back to the 5 minute chart and see what pattern happened there. Okay. Once you see what pattern happened there, if you see, we created a nice bear gap, but that was nothing against this bull gap, right? And we kept going up. As we, if you see here, even if you're not any trade inside this, you were saying that, okay, we came and closed above this, we got a follow through, now we got a pullback, and then we get another solid bar. I will trade this. Again, we will see what is the target of the move. If we say that, okay, this was the pullback candle on the hourly chart, and we now broke out of this, right? What is the breakout leg? The breakout leg started from here, and it was still this point. What is my first target? This is my first target. And if you notice, we reached the target and there was profit taking. But bulls were so strong. Right now, the bulls were so strong. Maybe you have taken your profit here, but you see the bulls are so strong and you know that it is still going to go up. Now, watch your fib levels, what is happening. At this point of time, when you have reached the 11 to 21% between these candles, I will watch out any closure below my previous high or the previous target. I will come out of my run, or I will try to see if I can get at least another 50% extension, since this leg was so strong, right? And see, another very strong leg started from here, and we got the third leg. So this is how You keep on looking at your chart, you keep on measuring, you look at your breakouts, you look at your breakdowns, and then you also look for failed breakouts and failed breakdowns, right? Once you see those failed breakouts and failed breakdowns, suppose you were saying that, okay, this is my support area. What the price does is it comes, it holds, it goes, it holds, it gets inside, it holds, it gets inside, it holds. Now you are seeing that the support area is working. You may have gone long here, you may have kept your stop loss here. The price may come down here, go back and close here, bounce again here, and then go up. So you buy now above this. This is telling you, okay, this is looking like an inverted head and shoulders right now, but the structure may not be so simple. So this is already telling you that, hey, there is a bounce that happened. It broke the support. It came back and sat above the support, took support there again, and giving me a bullish signal. I will get long here, and I'll keep my stop loss again below the support area. Is it making sense? Let me allow these people to be able to chat. Otherwise, you won't be able to put any questions. Okay, let me know if there are any questions at this point. Then we will move on to the next section, the trading range section. And Friday was a uh, exact area for looking at a trading range. Okay, so let me remove all drawings again. No questions, right? No questions yet. Okay, and we will move to the RTH chart for Friday. Regular trading hours chart. Okay, everything visible now. This was my close of Thursday, which is at 5317. Correct. And let me show you the ETA chart also on the 4 hour based on what I was trading. And this is something that I keep on looking. Whenever I see an inside bar on the 4 hour chart, now this is something that I have learned from my mentors. Okay, this is whenever I see a inside bar on a 4 hour chart, and I see such a big mother bar, and this being the child bar, I draw my very trusted fibs again. Okay. This I do every time I see a 4 hour mother bar. And the next day works out exactly according to those fibs. Now, if you see what happened, if you had seen this, you see here we did come to the 50% extension of this mother bar, breaking which I am expecting we can come and visit the 100% area. But now what do we have? Going back to the 5 minutes, we see that this 25 area has been an area of contention right from the beginning, just because of the fact it was the 50% area of that mother bar fib. Let's see where 9:30 started. Now let us, since we have the fib in place, let us go back to the regular trading hours. Okay. 9:30 started, we gapped up so much. There is no point in buying here since we gapped up so much, because there will be a pullback, right? Market always wants to close this gap. Now, once we came down here, we saw that one time, two times, three times, we could not close below the low of yesterday. And then we kept getting stuck at the 2.5 line. So that is when I thought that, okay, this will be the trading range for the day, starting from 25 to 17. This is how I got my trading range. Below this trading range, now I thought, okay, what if it breaks down? If it breaks down, Control Z, Control C, V, this box, why is it not pasting it out? This box will be replicated at the bottom. And see, we did come there exactly, right? This extension, this happened because of that mother bar fib. But if you are in a trading range and you are trading the trading range based on whatever you are seeing, let me change the color a little bit here. Yeah. If you're trading based on the trading range, you should take profit here. you should absolutely take profit here. Now, since this was my line and we broke that, we came above that, we started going above, created a bullish gap here, right? This is a bullish gap here. This is a bullish gap got created. The bears tried to come down. There may have been bears who sold the close of this candle. They sold on the top again and see they got their 50%, right? So the bears are break even. Now, instead of coming down, the bulls got it up. Now, what is your target? Your target is if we go back inside this trading range again, we will reach out for the top of the trading range. So that will be your resistance now. And see, that is your resistance now. What if we break out of this? When we break out, now see, one, two, three. The third bar is red. I have a I do have a bull gap here, but the bull gap is not strong enough. My third bar being red is telling me that there are pullbacks possible. Correct. But if somehow we can manage to get over that 25 line and hold it, what is your target? Again, 8 points to the top. And that will be the 33 area. See, we came back to the 33, 34 area. Once this has happened, once if we keep going back up again, now I'm thinking of what is the next possible move in the market. What I am saying is, or according to me, the next possible major move of the market will come only after the FOMC meeting. So if the market wants to move up, what will be my target on the upside, and where will I see? I will start to being careful. So if I again change the color of this a little bit, another 8 points on the top. So I will structure my trades based on these thoughts right now. So if we come here, we will come here again, and maybe we will go to the all-time high, get rejected, and come back down. Once we go to the all-time high, we go to these areas and come. See, here we are still being propelled by the 4-hour fib that we had. Now what we will do is we will go to settings. We will go back to the electronic trading hours. We'll go back to 4 hours, and then we will see tomorrow morning whether this 4 hour bar actually turns into a mother bar again. At that point of time, our concentration will move from the fibs of this bar to the fibs of this bar. Sorry, our concentration will move from the fibs of this 4 hour bar to the fibs of this 4 hour bar. If tomorrow morning I see that this has turned out to be another mother bar. Not tomorrow morning, market opens at 6 o'clock tonight, so it should be evident by 10 o'clock tonight what is going on. Right, and then we play along with those fibs and keep these levels in mind. So there are one, two, and if you put another block at the bottom, so that if it wants to do the 4 hours or the 1:1 of this particular candle, then you will take this, you will bring it down. This will be your next target. So we had a 20-point day today, and our trading range was in 8 points. So right now, since I'm not expecting any major move in the market before Wednesday, I will keep these 8 points target on the top and the 8 points target on the bottom. And this is how I will play. And every 10 points, I will consider that there may be support and resistance. There may be profit taking. There may, if we are going up, bears may be sitting here to bring the market back to the 50% area again. So I will be playing this one, two, three, four, five. These are the 5 boxes. I need to change the color of this. So that the 5 boxes. Yeah, one, two, three, four, and then this color also. So one, two, three, four, five. These are the 5 boxes, and this is my expectation for the next 2.5 days till Wednesday 2 o'clock till the market turns. Now, any questions of how we are getting to these areas, how we are finding the support and resistance, how we are setting these boxes, and we are saying that these are different tiered TRs, tiered trading ranges stacked on top of each other. Any questions? Okay. Let us move on. So we did the TR. I will talk about the higher time frames quickly. Let me, everyone here, yeah, remove drawings. drawings and let us. Oh, one more interesting thing that you will see here is we have an expanding triangle here. Now, I'm not going to talk about expanding triangles today. We will keep that for another time because expanding triangle in itself is a very big topic. Okay. So see, you're in the expanding triangle here. So the legs are expanding in this area. If we break out from this, there is a higher probability of going up. But as of this point, you see, we are exactly at the tip. Now we will have to see tomorrow morning what has happened all night before we decide on our levels to play and plan for the rest of the day on Monday. And Monday, after this kind of a day that we had on Friday, I am still expecting Monday to be also in the same range. And normally Mondays are slow. If it picks up, it normally picks up after 11, 11:30 or 12, or even after 2. And then we may see price trying to come up to the top of this area. But then if this guy forms another mother bar tomorrow, we will have to change our fibs. We will have to reanalyze, and then we will have to see what is happening. Okay. How do we mark support and resistance on the 4-hour chart? Very simple. These are all your, this is the whole area where your bulls are sitting. If we come out of this on the 4-hour chart, I will expect price to come and touch at least this 453395340 area, right? So this is my sell zone. This is my sell zone here. Now coming down here, this was the pullback attempt, right? The pullback attempt by the bears, or this was profit taking. But this is a zone where selling happened and the bulls broke out of this. I am saying on the 4-hour chart, this is a very solid buy zone because we had an attempt to come down and we broke out of that area and had a new high. So this is a very strong bullish area. However, this being news bars on CPI and PPI, what has happened is between this area and the 94 to 96 area, 5294 to 5296, there is hardly any volume. It has just vacuumed up from the bottom to the top. Okay. And since there is hardly any, now exactly the same thing happened in the previous CPI. When we came down, there was hardly any volume here. When we went back up, there was hardly any volume here. So this area still remains, I would say this is from 965 to 96, 5296 to 5274. This was the whole area. Okay, this was the whole. Now, if you go back to the 5 minutes, you will see this was the top of the TR that we were having at that point of time. See, as soon as we broke out of here, this area has very little volume below 5 to 8 foot, especially. So if we come down here, there's a high probability that a little push will bring it farther down here because I am not expecting any bulls to be in this area at this point. So FOMC, if we want to drop, this area will be a very, very good target to be seen. And then we can bounce from here and go back above again. We are in a bullish market. Market does not run by news. Market does not, if Powell does not say that we are actually going to increase the interest rate by 25 basis point, I do not think we are going to break down that 5302 to 5308 area as well. So we will stay there and then keep going back up, and that will be the low of this line also on the higher time frame. Resistance and supports on the higher time frame are more stronger than resistance and support on the lower time frame, but that does not mean the resistance on the lower time frames are not important. You have to give equal weightage to that. When price comes to that, you have to see how the price is reacting, how the price has been reacting over the past 1.5 hours, and then take your decision to decide whether you want to stay on in that trade, whether you want to come out of the trade and be flat, or whether you want to reverse the trade and get short. So there are three options, right? You keep on staying long, you come out of your position and stay flat, you continue your position, or that is similar to you keep on staying long, or you reverse your position and be short. So there are three things that you can do. So based on the behavior of your uh, of the price at that particular level, you need to take that decision. And once that decision has been taken, you will have to know what is your stop loss. Every trade needs a plan. As soon as you enter, you need to know that okay, I have a, like, for me myself, I personally, I always have a 7 point stop loss on yes. So you need to know your capability of holding on to a trade. You need to know what is the size of your account. You need to know that, okay, if I get a loss here, it is not that my world is ending right after that. Right? So that is how you need to size your positions. That is how you need to set your stop losses, and that is how you need to make sure that, okay, if I come out, if I take this stop loss, I will still be alive. My account is still good. I am still trading. Stop losses are taken. Do not be frustrated. Do not be afraid that your stop loss has been taken. Do not let a stop loss acceptance deter you from taking the next setup that has come your way. Don't be afraid. Take your stop losses. Take your stop losses. Taking your stop losses is also a way to learn that, okay, I am okay to accept this much loss because I know that in the next trade I will cover it up. So accept it, it is a very tough thing to do, accepting that, okay, I lost $200, I lost $300. Yes, you did lose. You are not the market maker. You are not the master of the market. You are nothing. You are nothing more than a speck of dust in this whole universe of day trading. Okay, so you will be wrong. Accept the fact. Take the stop loss. That will make you a better trader. If you are starting to take your stop loss and accepting the fact that, okay, I can be wrong, there's a possibility that I am wrong. Okay, so if you do that, and do not hold on to a trade because your ego is telling you that it will go up. Do not do that. Okay, so this is about the higher time frames. I'll show some more. Let us go back to the 4-hour chart. Okay, so here I find another nice area, just like we did on the top. This is also the 4-hour support area. Now you will question that, hey Sabut, 5121 to 5194. You want us to keep a 20, 24, 26 point stop loss? No. Next, what we do, once we have marked these levels on the 4-hour chart, we bring it down to the next time frame. Now you see this is your 1-hour support, right? This forms your actual support. Now you see this breakout also. You can bring it down here as well. So 9 9 to 8 9, these 10 points. Now these 10 points are also pretty high. So what I'll do is I will say this is my actual support. And that brings me to my 8 9 to 9 3. That's a 6 point area. But here on the 6 point area, this is the best support area that I have. Correct? Making sense? I come down here again. Now I'm doing it on the 1-hour chart. I think you got an idea how to do it on the 4 hours, right? Here again, this is my support, right? Coming down here, here is my support. Now, if you want to drill down into these areas, get to the 15-minute chart. If you want to drill down, I don't normally drill down to 15 minutes and see. Now see what is happening here. It's almost the same. You can maybe shave off a couple of points from here if you start from here saying that, hey, this is where the support actually starts and it's 54 to 55. So this is a 1 point support here. But do not trade based on 1 point support area like this, because if you keep your stop loss here, your stop loss, if you're long here, your stop loss should be here. This is the nearest low that created a new high. This is a major low, right, on the 15-minute chart. So even on the 5-minute chart, if you're going long here, if you're going long in that area, you need to make sure that you have some room to let them go here. Okay. So this is another way. So you drill down your areas and you keep looking at it. Now, if I look at one more thing, now how do I look at structures? Let's come to the 4-hour chart. There is something interesting that is. I see that if I say that this is the all-time high and this is the all-time high, if I say it's not the right thing, I see that we have and these things you will find only when you zoom out, right? When you're in a zoomed in condition, you won't even find it. I see an inverted head and shoulder structure, which if taken out, this being the neckline, which if taken out, how do we get the measured move of that? Now, you consider this, you put your 50% here. This is your measured move. Now you will see how it adds up to my weekly measured. If I go back to the weekly, I'm on the monthly. I'm see that area of head and shoulders is actually these three bars and then these four bars. These three bars came down. This was the shoulder, this was the shoulder, this was the head, and we kept going up. Now, both of them have their 100% target at A57105660. So 5500 to 5600 is a very good target for the bulls who are looking at this structure, right? But then the market has to support that. I mean, we do know we are not keeping a 200 point thing because we do not keep open positions overnight. I do not keep open positions overnight, but what we do is we keep these higher time frame levels in mind, and we look for measured move targets in the lower time frame. But if you want to play based on this, if we close above here next week, based on the current market conditions, you can go 3 months ahead and look for a spy long contract targeting this level. You have to extrapolate this level to your current spy contract or to the spy levels so that you understand. What I do is if 5710 second. What I do is if 5710 is my ES level, my SPX level is normally 20 points lower. That means it will bring me to 5690, and I have not extrapolated how it goes to SPY. You can take a look at it. I will also take a look at it. Many people have asked me. I'll find that out, and I will post that in some time in one of the next webinars. Okay, so this is how we get measured moves. This is how we predict channels. We talked about higher time frame support and resistances. We talked about most of the measured moves. Now we will talk about something very interesting that I have been researching for the last few weeks. Okay, in every 100, there are certain areas which are of importance. So if I go from say 5200 to 5300, let me write it down instead. Let us go from 5200 to 5300. Okay, 300. This is my box. Now, if I expand this box, there are certain areas which are generally resistance or support in the next 100, in the previous 100. Okay, so that is something that I have been looking at, and the results are really good. 5200 to 5208. That is one area. You can go back and check these out in the lower 100, in the upper 100. You will see they are matching 90 to 95% of the times. Okay, and 90 to 95% of the times is a very good probability as far as we talk about trading. Okay, now this is one. Let me put in a different color so that it becomes visible. Okay, after this there is one line, 1 3. Let me just draw this and change it. This is 1 3. 5 2. Where is it? Coordinates 5213. 2 3. Okay, this is one line. After that, let me see. I have put it down in my other chart. After 5213, don't tell me it's gone. After 5213, we have another area which is 2 3 to 2 5. 2 3 5. Yeah, this is the next area, right? After 2325, you have another line which is at 3 3, which you have at 3 3. Correct. Now after 3 3, it goes to the next line is from 4 7 to 4 9. That is the next area. So you go to 4 9, 4 9 to 4 7. This is the next area, right? After that, 4 7 to 4 9. This is the next area, right? After that, 4 9 to 4 7. This is the next area, right? After that, 4 7 to 4 9. This is the next area, right? After that, 4 9 to 4 7. This is the next area, right? After that, You have okay. My class guys, I forgot to give you the line in the middle here in the 50 range, and 57 is another line. 57 is another line. Okay, after 57, okay, let me take a look at what I have after that. But on the top, we have 94296. This is another level. Here you have 74276. Getting these numbers correct. 74276. That's another area. 84 is a very important line. Even 88, but 84 mostly. I just keep the 8. I just remember the 84 line. And then here in this, we have 47 to 49, which I already drew. 57 and then 65 to 67. 65. Okay. These are the general support and resistance areas in each 100. Okay. 33 is very important. 13 is very important. 94 to 96 is very important. 74 to 76 is very important. 0 to 2 to 8 is very important. You copy these areas in your in the lower 100, in the previous 100, in the previous 100, and do a back testing. Okay, you will see these areas work out perfectly. So there are multiple ways you can find support and resistance. I mean, if I tell you that this is the support and resistance areas, you don't need to look at anything else. But what you do is you match these areas up with your higher time frames and see what is happening when price goes there, how it is reacting with that, and then how it is moving down. Whenever you see that there is on the 5 minute chart, if you see that there is a chance and the market is behaving like it is going to reverse, you immediately look to the left. Suppose I am here, right? I am here and I am looking at that. Okay, this is looking that the market is reversing. What I do is immediately I draw a box here. I will extend this box. I will extend this box to the right, to the left, and see, oh, this was the case here. We reversed from this place as well. So now we will have to be careful that, okay, if we fall down from here, suppose you are long from here. If we fall down from here, maybe we will come down here. So you keep a stop loss somewhere here and then say that, okay, maybe since the market is so bullish, you do a measured move and see if you can get to this 8-4 level, right? So that is how we have been trading. And if you look at the previous ones, you will see that if 7476 is taken up, 8-4, it goes straight there. Okay, even in the 5-3 area. So now since we are in an uncharted territory, right? If we go above here, we are in an uncharted territory. The only instruments or the only weapons that we have to fight against volatility are these levels, on each hundreds section, and then your measured moves. So you will have to keep on measuring, you will have to keep on drawing and redrawing your channels. You will draw your channels on the higher time frame, you will draw your channels on the lower time frame, and then before the beginning of the week or the beginning of the day, you have to make a plan that, okay, this is where, these are the places where I would like to go long, these are the places where I would like to go short. If I go long here, this is my stop loss. If I go short here, this is my stop loss. If I go long here, this is my profit target, my first profit target where I'll book most of my profit. If I come short, this is the profit target where I'll book most of the profit. So these are the different things that you'll have to keep in your mind, and then create the plan and then follow the plan. If you do not follow the plan, your execution will go to the dumps. Trust me, your execution will go to the dumps. If you have a plan, you will, even if you will lose very less. If you do not have a plan, you will keep losing one trade after the other till you blow your account up. Okay. Any questions here? So that is all I had for today. Any questions that you guys have? I will be waiting for a few more minutes. So I will call it a day here. I will see you again next weekend. If you have any topics in mind that you want to discuss, let me know. You can reach me out in the YouTube comments, on the Facebook page, on the Discord. If you have any specific topic in mind, if you want a discussion on any specific stock, and if you want me to go into details of that and do some research, let me know. That may not be immediate, but of course, I will take time, and I will try to get you the answers that you are looking for. Okay, so we will stop here today, and I will see you again next week at 11 o'clock, and the link will be the same. Okay, thank you guys. Have a great rest of the weekend.